Ladies and gentlemen, boys and girls, I think we have found it, the next stock that I will put a lot of money into. Today is going to be a video on the stock, what I'm going to do with this stock, what I'm going to be putting it in, what the growth aspects are for this company, and what I can really expect from a company of this caliber to produce in the future. We're going to take some stock analysis and just dive straight into what stock would I be buying in the soon future. That stock today is Amazon.com. We all know Amazon. You probably have a Prime membership. If you guys have a Prime membership, get things shipped to your house, you know what Amazon is. If you guys are in the enterprise space or corporate, you might know what AWS is, which is pretty much powering the entire world and any website that you have out there and any infrastructure. So, if you guys know, Amazon has really given us a 0.18% return year to date. All investors have been getting a 0.18% return year to date, and that has not been a very good sign for Amazon. The stock, it hasn't been performing well, but the company itself has been performing astronomical. We could see that the company today is about $220 and $221 overnight. But in the past couple of months, they've just really haven't done much. It's a pretty much flat for the year. Actually, they're up 15%, but they're lagging in perspective of other big tech companies like Nvidia, Google, Apple, even. And Apple's a lagger. Like, I think Amazon is at the bottom of the bottom for the Mag 7 in terms of stock price appreciation this year. So, why the news? Why are people looking into Amazon as a play in today's world, in today's stock market? Well, one, the stock had slipped a little bit just because, they were having to pay $2.5 billion to settle with the FTC's Prime lawsuit. And essentially, if you don't know what this is, the lawsuit is really about Amazon using deceptive methods to sign up for customers for their Prime memberships. And at the end of this entire investigation, Amazon really just said, screw it, we're going to pay everybody out and just settle. Like, we don't need to get into this big lawyer action fee and all that and really fight for this. Let's just pay off the $2.5 billion. So, what does that equate to for humans or us today? Amazon, if you have an Amazon Prime membership, you might be entitled to this $51, and you've got to see if you're eligible, sign up, and you might just get this $51 per membership that you have. If you got 5 memberships in the family, you might be getting $250. So that is what they are settling for. I personally think this is an okay move from a stock perspective or as a business perspective, because there's a lot more out there that you should be scared about if you were to own Amazon stock. It's not of like, oh, they deceived customers for signing up for Prime, because you can always, cancel that and they're going to pay it out and settle. But it's more of like, what are the scary factors in owning Amazon stock? It's one, monopolistic breakup from the government. If the government were to come in and say, we need to break you up in terms of your business segments, your online platform, your AWS platform, your third party shipping platform, all of those things, if they were to take one piece away from the Amazon pie, it makes it very difficult for Amazon to come back in and demand such a premium for the stock in terms of the ratio that you're paying for every dollar of earnings. So let's get into what Amazon, has and the valuation behind it. Personally, if you guys don't know what Zoox is pretty much a robo-taxi car that they've rolled out in Vegas in the past couple of months, I believe September, early September. This is pretty much a little pod that you're facing 2 rows back to back. And if I'll show you here, this is the Zoox platform here. You're sitting back to back, no, not back to back, but front to front with another, party. And you could connect your music into here. You can live it up. You can, just get your work done if you need a ride. I personally like this a little bit more than Waymo because, one, it feels more interactive. Two, it feels futuristic. And three, I kind of just like the idea that I don't have to actually sit in a regular vehicle. It's a different experience. I think I'd be willing to pay just, a little bit more, maybe like 5% more than a Waymo to get this experience of I'm gonna go to a concert. Let me just put on the music and let me talk to my friends across from each other so we're not shouting in the back and the front of the car. And this 100% beats Ubers because there's no random person that you gotta cater to at the end of the night. You don't gotta ask them how their night of driving is, and this is just way better. I think this is one of those moonshot plays for Amazon. It's not going to equate in billions and billions of dollars for the Amazon stock, but I think this could be something worthwhile that Amazon investors could be paid out for later on. But let's look at the stock overall here. Amazon, this is pretty much a company that you would want to see excel in all aspects. Revenue increasing double digits, low double digits, but still increasing up and to the right, up and to the right for net income as well. Free cash flows have been dropping, but that is going to be explained by the massive amount of capital expenditures that they've been throwing into just data center and anything AWS related. You could see that in the past trailing 12 months, they've added, just quarter over quarter, what is this? $11 billion of capex. And you are really intending Amazon to throw this money back into the company. Like all this free cash flow, throw it back into the company because it's not a value stock at the end of the day. Amazon is a growth stock. It is a growth company that this is exactly what you want to see. Andy Jassy took over recently, and under Bezos's leadership, he was throwing all of this money straight back into the company to grow it through capex and all of these other initiatives to hopefully, and they've shown it time and time again, get a return for their investors here. So I'm not too worried about this company throwing money back into capex because in theory, you should be getting a return for this in the next couple of years. Though it looks like free cash flows are dropping, that is justified with the expenditures in capital that they have been putting out there. Shares have been pretty much remaining flat, if not adding 1 to 2%. Obviously, we don't like that as investors, but if they're, just giving 1 or 2% in share RSUs to their employees, that is going to be manageable, I believe. But on a huge caliber scale that they are at a $2 trillion company, raising, a 1 to 2% in shares, I don't like that. I would actually like if they were to buy back shares, but it seems that they would rather put their money into investing in, data center and AI platforms. And I think that might actually give them a better return, given that the stock hasn't dropped so much in the past couple of quarters that it doesn't really make that much sense to buy it back unless they really think the stock is undervalued today. But where does it trade on a price to earnings ratio in the past couple of months? We could see that this is a historic low for Amazon stock in terms of the price to earnings ratio here. This company has traded almost around 50s to 40s to 30s now. And it is really, you're catching Amazon at a low in terms of their net income to their price. Like this is the best time that Amazon is creating money and you are paying for each dollar of earnings. And a lot of people actually like to value Amazon off their operating cash flow, which is pretty much everything considered, capital expenditures, not really, that much of a factor in terms of like putting your number down. This operating cash flow is really anything that they can create from operations, all the cash that they can create from operations. You can see that on a price to operating cash flow basis, we're pretty much like at a low. It is pretty much like where we are always, right? The stock has grown, but the earnings have grown as well. And this is justified in the stock price, I believe, that we are able to command a premium of a 32 PE in relative to all other companies out there. This makes sense. I believe it is a fair value today, if not undervalued. I actually think we might be on the slightly undervalued side. Let's take a calculator here. If you would do free cash flows, it's very skewed by the capital expenditures that they're doing. So let's take a net income little calculator here, little valuation calculator. I believe they will actually grow earnings at maybe 15%, given that their CAGR is 23% in the past. Share growth, they will probably keep adding 1% shares. And right now, their price to earnings ratio is about 32. Let's give them a 32. And I want a 12% return just because I were to take this risk here. So on this calculation basis, the fair value today is about 6% higher. So we're about 6% higher, but let's say they grow 20% in the next 5 years. We're actually undervalued by 30%, and in 5 years, we should be more than doubled, you know. Let's take this might be egregious. Let's take the middle of 15 and 17 at a set, or 15 and 20 at a 17 earnings growth. We are looking at a 15% undervaluation today. And in 5 years, you will have a double up on your stock. I think any investor would take this today. Any growth of 15 or 17% is going to be immense. You see all these plays that Amazon has. Everything is working towards them. And hopefully the government does not break them up like Google and we have this entire scare again. But this is almost the exact same thing as Google. Nobody wanted Google. The stock didn't move. Now the stock is going to be rewarded for their investors. If you had invested in Google, you would have made out like a bandit. You're probably up about 30 to 40% year to date. Now, Amazon has been a lagger, and it seems that if you were to put your money into any of the big tech Mag 7 laggers, you would have made money in the past. I don't think that valuations overall are extremely stretched, though they are higher. It doesn't seem like we are extremely stretched on a valuation basis here. I'm pretty sure if you were to look back at Cisco in the 2000 .com bust, I believe they were almost like 60 to 200s like price to earnings ratio. It's a huge range, but that's way more than we are today. So I don't think we have to worry about bubble territory yet, maybe in the next couple of years. But if you were to worry about bubbles, you are kind of trying to time the market. And if you were to time the market, how did that play out for the past couple of years? Not very well. I think you buy great companies at fair prices and you will be rewarded. So that is this in Amazon. And I will be putting my money in Amazon, which we will get to soon. But before I get into that, let's look at every single segment of revenue that Amazon has. And if you were to look just here at online stores, up and to the right, this company has been growing. This is the Amazon.com platform. This is what we like to see. This is the biggest generating of revenue, but I believe the highest margins would actually be AWS. So let's look at AWS. This is an insane amount of growth throughout a couple of years. Does Amazon look like they are a dying company? I don't think so. Let's look at third-party sellers up and to the right as well in the history of the past couple of years. Let's look at advertising, everything that we have on Prime Video and that as well. Up and to the right. Like, what can we ask for more in terms of Amazon stock? Subscriptions. Subscriptions, we know that if you are sold on a subscription, you're more likely to keep buying more things. So you get more subscriptions by giving promos and having people deceptively sign up for your platform, which isn't too much of a worry because they have, settled and they are still getting subscription growth, but that will lead into online stores revenue generation as well. The more I am having on a platform, the more I'm likely to spend. Like if I have a Costco membership, do you think I'm going to spend less with Costco or more with Costco? Chances are you will keep spending more with Costco because it is a cheap way to get the goods and services that you need. So all of that, physical stores, I believe they're kind of shutting down a little bit of these like grocery stores that they have. But overall, I think that Amazon has just been doing an immense job of growing the business. And this is something that I want to be a part of in the past 5 years and the next 15 years. So what are they trading at on a forward basis? Forward basis 32. Price earnings here on stockanalysis.com is about 33. So at a 32 forward PE, I am okay with paying for Amazon because they've always traded at a premium and it is one of the most dominant companies in the world. That is the trade-off that you're making. And you and Warren Buffett would probably agree that you would rather buy a great company at a fair price than a fair company at a fair price. or a fair company at a great price even. So I am very, very excited in Amazon today. Currently, I have about $11,000 and my cost basis is around 214. The price of the last time I ran my report was 218. Currently, I'm up about $900 and 8% gain so far. This has been a new position for me. I've been adding recently, and it's about $12,000 in market value today. I really do want to grow this stock into a at least $20 to $25,000 position. If I were to grow it into a $20 to $25,000 position, this would make a lot of sense for my portfolio. It is a safer bet. It is a compounding machine that is going to keep growing and growing, and I think I want to be part of that. And I think in 10 years, I were to look back, I would say I probably made a great choice in buying Amazon today. So this is what I'm doing with my portfolio. I do want to keep adding more. I do have a limit buy at $215, and I have another limit buy at $210. If those prices hit, I will be purchasing another, $3,000 to $4,000 each time. And of course, if we drop to 210, I'll be deploying more money. And if I really hope that we do get to $200 a share in Amazon, I will be loading the boat. So thank you guys so much for watching this video. This is everything that I'm doing with my portfolio and Amazon stock itself. I truly believe that Amazon is undervalued today. This is what I'm doing with my money. Of course, do what you will with your money. And this is for entertainment purposes only. Do not make any decisions off investments just because I am. Do your own due diligence. And thank you guys so much for watching. And if you guys have made it to this point of the video, make sure that you guys are leaving a subscribe and like the video if you guys like this kind of stock analysis. It really helps out the channel. We're growing so fast. Thank you guys so much. It means the world to me. Peace out.